Hello, everyone, and welcome to today's webcast reviewing HIVE Blockchain Technologies financial results for quarter ended December 31st, 2022. On slide number 2, I would like to briefly note disclosures. Except for statements of historical fact, this presentation contains forward-looking information within the meaning of the applicable Canadian and U.S. securities regulations. These forward-looking statements are based on expectations, estimates, and assumptions as of the date of this presentation. On slide number 3, I am pleased to introduce today's presenters, Frank Holmes, Executive Chairman, Aydin Kilic, President and CEO, Darcy Duberis, Chief Financial Officer, and Adam Sharp, Editor of the HIVE newsletter. I would now like to hand the presentation over to Frank Holmes, Executive Chairman, for a macro overview of the quarter. Frank.
Thank you, Holly. Well, I'm going to try to go quickly, comprehensive, but concise enough to give you a macro recap of what we've been seeing and how HIVE is doing through this quarter. But first and foremost, besides safe harbor, is to understand, in addition to that the DNA of volatility. And every asset class has a unique DNA of volatility. And what's important here is to recognize that the S&P 500 pre-COVID was the same volatility as gold. After COVID, it's now almost twice the volatility on a one-day basis. On a 10-day, they're about the same, as you can see from this visual. But what's here is key for you to see is that gold is so often compared to Bitcoin, but Bitcoin is 4 times more volatile on a one-day basis than gold bullion. And it's more than 3.3 times on a 10-day period. HIVE blockchain is even more volatile. And this is be expected because gold stocks are more volatile than bullion, and HIVE would be more volatile than Bitcoin. MicroStrategy is even more volatile than HIVE. So how do we talk about our strategy? You know, our strategy and how do we position the hearts and minds of investors is to have this sort of mindset of being agile and have first mover advantage. One of the other parts of that is that we're really focused on the cash flow return on invested capital, how we buy equipment, where we source electricity, how we pivot, how we use software. And this is really important, that intellectual capital. Last year, when Bitcoin was 50% higher, we did generate almost $10 million of revenue per employee, and that's substantially more than S&P 500 companies, and is much more like a gold royalty company. Maintain and sustain our unique value proposition. Well, it's being and recognizing that Bitcoin mining is really a subset of the great digital transformation we're all going through. And you need data centers to do that. And going forward, you're going to need GPU chips. So we've been able to embrace that and recognize that we are part of the great digital transformation. So we will pursue every quarter, every month of what we're doing to stay and be the first mover advantage. The leadership team is key. Darcy's been through previous bear cycles, so he's been very adept at what we're doing. Aydin has done a phenomenal job as our President and Chief Operating Officer, who is now our CEO, which I'm so excited about. We can see Gabe as our General Counsel and Johanna Thornblatt as the President of Sweden, a wonderful location for us, and it's always been a key component of huge growth opportunities for us. So our thought process, first to go public, first to develop our own unique ASIC mining rig with the leadership of Aydin, first to buy our own data centers, and then people paying substantially more for their data centers than what we started doing and developing, first to have a green energy focus, first to be interlisted. And I think these are really important sort of mindsets that we have. We stay lean by focusing on the cash flow return on invested capital. This is a source of data that shows you that HIVE has the lowest admin cost as a percentage of revenue to our peers. And you can see on the far right-hand side, the difference is almost tenfold greater. in our peers. Our capital structure, as you can see here, is about 83 million shares with a very small number of warrants and options outstanding. I think this is just to give you an idea, is that if Bitcoin market caps are down because Bitcoin is down and all the other crypto coins with it follow Bitcoin. Bitcoin is the leader. So it's so important that it dictates our price action. We do see in our ecosystem a lot of short-term traders. They look at Bitcoin as overbought, oversold. And this is going back to 2020. You can see here almost 1, 2, 3, 4, 5, 6, 7, 8, 9 times that it went oversold. And you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 times it went overbought. And that's what a lot of traders do. They trade these moves that can, which, as you can see, that if it's 4 times what the gold is, and it can give you huge leverage in the upside. So HIVE basically tracks and moves around up and down with Bitcoin prices. And you can see here that DNA of volatility shows up. So it's so sentiment driven. But what we've experienced in the past year, which is a real shocker to me, that we would see Bitcoin prices fall 60% year over year from highs to lows, but the difficulty of more people coming into mine and more people get into financial difficulties, something that HIVE has not been into that realm of difficulties, but we've been able to maintain and be profitable during this time period. So what does this mean? Rising difficulty means that there are more people mining Bitcoin. Every day, there is opportunities to mine 900 new Bitcoin. And it's very competitive to mine that 900 Bitcoin. We're happy to share with you, we've been able to maintain 1% of our position by increasing our exahash and by improving the quality of the machines that are mining, in addition to having low cost of energy or selling back energy when it's needed to be, when you have difficulties in the markets. But this is a big challenge for all the crypto mining companies. HIVE is green energy and focused. Something that's very important is the value proposition we've made to the shareholders, and we continue to source low electricity costs, low temperatures, and fast internet connections. What we've seen that's taken place in Amsterdam last year, whereas you can take 2 megawatts of electricity, heat a huge water tank, and then heat a greenhouse of 6 football fields. And these are red peppers, and what you can see with this visual, this here is showing you robots, the use of robots to be able to pick all these red peppers. And our vision is to build this out in northern Sweden. HIVE has also been well positioned, giving back with the strongest ESG strategy, supporting a hockey team where there's been 6 players from this community. It's like Friday night football in Texas. It's hockey in Sweden, and this is the pro team. And we are sponsoring 12 kids teams learning how to play hockey, in addition to the arena, which allows the community to really embrace HIVE. This is our future. This is what we'll be able to recycle that molecule of electricity from a hydro dam near us, and we'll be able to recycle to be able to create produce for the local area. Our financial results, I'm thrilled to show that it's only 14 million because Bitcoin fell, but we still an adjusted EBITDA made 1.5 million. Cash in, cash out, we still made money for the quarter of just under $500,000. We produced the equivalent of 787 Bitcoin, and our cost of Bitcoin produced is 13,364. We know that our peers, they would not be able to deliver this, and with a low SG&A overall, it's allowed us to be lean and mean. We've done this. With all this is showing you as a visual that the revenue has been declining because our Bitcoin prices are declining, but we can improve our quality of our machines and also increase our exahash to deal with the difficulty and deal with the headwind of more people mining. This is the Bitcoin mining by HIVE per quarter, but even with a challenging third quarter, we still were able to deliver. I'm really proud of the team, great results. Bitcoin on our balance sheet, when you look on a year-over-year basis, we increased our coin on our balance sheet. We are mining with our GPU chips, and we use AI, and we immediately convert that to Bitcoin, and we sell that. But this is another visual of trying to show you that Bitcoin bull market begins 500 days after the halving. So it's hopeful. It's a hopeful type of, I've never met an industry that has so much hope, prosperity mindset to it. This to me was great humor. This is a kid working at McDonald's because he's experienced a 60% write down. He rolled a lot of his Bitcoin into these sites that promise him energy, and now he's a waiter at McDonald's. It's an industry where I just find it remarkable that the conferences are sold out. This would never happen in the gold ecosystem where gold would fall 60% and you would have such humor and you would have people attending conferences looking for the next big wave in the upside. But one of the parts that took place last year in the spring, late spring, was a meltdown of Three Arrows Capital. What's important for investors, the Wall Street Journal covered that most of it's sort of insular, that it's all within its own ecosystem. Yes, they started seeing retail new investors coming in to get yields on their money, but really a lot of the Bitcoin people, early investors in Ethereum, Bitcoin, that made a lot of money, rolled it back into these other places to get a yield, and they've all been wiped out. So to me, this is the most interesting, the interconnections, the almost the interbreeding of what's taking place in this industry. And it didn't help with to take place in this last quarter with Congress, the FTX problem that 1 in 3 members got cash from crypto exchange bosses. It's just really sad. It makes it all too political when really Bitcoin mining is an important ingredient in the great digital transformation. This is another visual of showing you a Silvergate exchange network, that they're all connected with each other, hurt each other. Coinbase and Silvergate. Just hope that the crisis of FTX, as we know, has continued to hurt other players, that historically it takes about 12 to 14 months for this industry to repair itself as new regulations come in. But even with this bounce now out of the lows caused by FTX implosion, we've witnessed Bitcoin rallying from 15,000 and change to up to 25,000, and the total dollar value of Bitcoin with no CEO, no marketing budget, an incredible ecosystem of nodes all over the world. Its market cap is bigger than Visa, it's bigger than Facebook, it's bigger than JP Morgan, it's bigger than PayPal or Samsung. So I think it's really important because it's a reflection of the decentralized global network of nodes and validators that gives us its resiliency. Weekly settlements on the Bitcoin network increase, and especially with the Lightning Network, it's only improving. It's a real shocker in total dollars that's traded. Global asset universe, as you can see, another way of looking at it, how small Bitcoin is relative to gold, how small Bitcoin is relative to commercial real estate, to the global GDP, to equities, to debt securities, and to real estate residential. Bitcoin is still early in this sort of global adoption. Now I want to turn it over to Darcy Daubaras, our CFO, to give you highlights and more granularity on our financial results. Darcy?
Thank you. And I will now talk about our snapshot of growth for HIVE. Just want to start talking about at the beginning, in spite of the recent effects of contagions like FTX that's affecting our community, nonetheless, HIVE has had other sources of revenue to help us weather this uncertainty. Some of these items are, through the sale of energy back to our Sweden electricity provider, and the ability to load balance, and some of the strategies we've taken in Sweden, where one of our major facilities is located. Unfortunately, some of our peers didn't have these other sources of revenue, and as you've seen in the news, many of them have been having some struggles. To begin with, I'd like to remind listeners about 2 accounting practices that can have a material effect on HIVE's results, one being mark-to-market accounting, and the second being non-cash charges. Mark-to-market accounting is a practice that involves adjusting the value of an asset to reflect its value as determined by current market conditions. The market value is determined based on what a company would get for if the asset was sold at that point in time. Mark-to-market losses are paper losses generated through an accounting entry rather than the actual sale of a security. The swings in digital assets impact paper profits and losses each quarter. So our Bitcoin digital assets do generate unrealized gains and losses each quarter, depending on the movement of the price of Bitcoin. And it is important that investors understand the differences in operating earnings or losses, in addition to mark-to-market paper gains and losses each quarter. The second big thing, as I'd mentioned, is non-cash charges. A non-cash charge is a write-down or accounting expense that does not involve a cash payment. Depreciation, amortization, depletion, stock-based compensation, and asset impairments are common non-cash charges that reduce earnings but not cash flows. During this current quarter, just completed, we took 2 non-cash charges as a result of the continuing bear market that we are experiencing as required under accounting prescriptions. The first was an impairment under IAS 36 on mining equipment of $38.8 million, which was required due to indications of impairment that are present in the continuing bear market we are experiencing, and also a provision against deposits on mining equipment of $22.7 million based on an assessment of these deposits made on purchase orders and the expected delivery of the equipment. Now jumping into the core of my presentation, we've got an overview of the results for the 9-month period ended December 31st, 2022. As you can see, for the 9 months, we had revenue of $88.1 million, a mining margin of $46.6 million, adjusted EBITDA of $31.6 million, digital currencies on the balance sheet of $39 million, and during the 9-month period, we mined 2,466 Bitcoins, and the equivalent BTC mined, taking into account a conversion of other coins such as Ethereum into Bitcoin equivalents, was 3,503 Bitcoin. As you can see, we have a very healthy balance sheet. Our cash position stood at $8.6 million at December 31st, 2022, along with an additional $39 million in Bitcoin digital currencies. We also have $13.6 million in amounts receivable and prepaids. The market value of our strategic investments fell slightly during the quarter as a result of the general market instability, but remain at a relatively strong $5.5 million. We maintain a strong net cash position and healthy working capital to fund our operations and growth with very little debt on our balance sheet. On the next slide, our gross mining margin, which equates to our revenues minus direct operating and maintenance costs, decreased in absolute dollars to $3.6 million, or 25%, in the most recent quarter, compared to $62.3 million, or 91%, in the prior year comparative. Gross mining margin is also partially dependent on various external network factors, including the high mining difficulty we are experiencing and the amount of digital currency rewards miners receive and the market price of the digital currencies at the time of mining. In this most recent completed quarter, we are reporting a loss of $1.09 per share compared to a net income of 66 cents per share reported in Q3 last year. In looking at our year-over-year revenue, we generated revenue from digital currency mining in the third quarter of fiscal 2023 of $14.3 million versus $68.8 million in the prior year third quarter. The decrease in revenues versus the same quarter in fiscal 2022 can be attributable to 3 main headlines: the ever-increasing Bitcoin difficulty hash rates over the past 6 months, the continuing drop in the price of Bitcoin that we are experiencing, and to a significant extent, the Ethereum merge, as this current quarter does not include any Ethereum revenues since the merge took place on September 15th of 2022. This triple punch contributed strongly to the significant drop in revenues that we experienced. As mentioned previously, our gross mining margin, which equates to our revenues minus direct operating and maintenance costs, decreased in absolute dollars to $3.6 million in the most recent quarter compared to $62.3 million in the prior year comparative. Taking a look at comparing our current fiscal Q3 quarter to the previous Q2 quarter, we generated revenue from digital currency mining in this third quarter of fiscal 2023 of $14.3 million versus $30.0 million in the previous quarter. The decrease in revenues versus the previous quarter was impacted by the continuing low prices of Bitcoin and the Ethereum merge, as already noted. This current quarter does not have any Ethereum revenues compared to the prior to Q2 quarter, which did prior to the merge taking place. Our gross mining margin decreased in absolute dollars to $3.6 million in the most recent quarter compared to $15.9 million in the prior quarter comparative. Taking a look at financial metrics, our adjusted EBITDA decreased in this third quarter of fiscal 2023 to $1.5 million versus $69.6 million in the prior year comparative quarter. I will highlight that adjusted EBITDA is a non-IFRS figure. Additionally, in the third quarter of fiscal 2023, we experienced a loss of $90 million compared to a net income of $51.2 million in the prior year comparative quarter. As mentioned at the top of my presentation, this decrease was driven predominantly by the non-cash charges and impairments that we took in this period of $38.8 million on miner equipment and a provision for equipment deposits of $22.7 million. This combined with the lack of Ethereum revenues in the Q3 quarter has resulted in this differential. Taking a look at our quarter over quarter, our adjusted EBITDA decreased in this third quarter of fiscal 2023 to $1.5 million versus $18.8 million in the prior quarter. Again, as I always do, I would like to highlight that adjusted EBITDA is a non-IFRS figure. In the third quarter of fiscal 2023, we experienced a loss of $90 million compared to a loss of $37 million in the prior quarter. These losses are driven predominantly by significant non-cash charges experienced in the current Q3 quarter, the largest being that impairment on miner equipment of $38.8 million and provision for equipment deposits of $22.7 million, again reiterating that these are non-cash charges and are just accounting metrics that are required. Just want to remind everybody, later on in this presentation, a well-respected newsletter writer, Adam Sharp, will be giving a comparative analysis of our peers so that he can take a look at how we rate compared to our compadres within the industry. I would like to now turn the presentation over to Aydin Kilic, HIVE's President and CEO.
Hello, everybody. I'm going to give you an executive update. I'm Aydin Kilic, the President and CEO of HIVE. And on that note, I was actually appointed to CEO this quarter, which was very exciting milestone, and very grateful to Frank and the board of directors for this amazing opportunity. And this is a picture with me and the lovely Johanna recently at the European Blockchain Convention in Barcelona, Spain. So our team, we're spread out across the globe. We're always in touch, and it's a great journey. Next slide. And so being that this is our quarterly earnings presentation, I'm going to do a quarterly efficiency analysis. Again, you could see that HIVE led our peers in the highest Bitcoin per exahash, 115, 105, and 114. This will vary month by month with network difficulty, but what's important is to see how the peers stack up against each other each month. And again, you could see HIVE consistently leading the pack. Now, this is a very important figure to understand because as miners scale, People talk about economies of scale. Well, no, this is a game of economies of efficiency, because you see some of the companies that have scaled, their uptime and their Bitcoin per exahash is in the 60 and 70 range, right? Whereas the top performers are north of 100. Next slide. But it's not just about your efficiency. That is a marker of performance. However, profit ultimately is what we are striving after as a public company, and delivering value to our shareholders and having good cash flow return on invested capital. And so this is how we were very agile, and we pivoted this quarter when there was a lot of red, and it was a very tough quarter for a lot of companies, a lot of insolvency, a lot of people going under. So our average cost to produce a Bitcoin was 13,600. The average price of Bitcoin during this quarter was 18,000. That's a 25% profit margin on our operations. And this is very notable because difficulty even increased 20% this quarter alone. Now, you might notice, okay, we produced 44% less coins, but we did that very strategically. And the reason why is because when any of our index power costs went up, we would curtail that production strategically to avoid incurring any unprofitable production. We always want to mine for profit, as any crypto miner should. You don't just mine for scale. That's what I mean about economies of efficiency. And even still, we were faced with an increased cost in production this quarter, but nevertheless, by focusing on economies of efficiency, we downclocked some of our machines to improve their operating efficiency. We avoided mining when we had any index power that was expensive. We were able to come through this quarter, which I'm very proud of my team, 25% profit margins. And let's have a look at the next slide. Now, to provide you a little bit more insight into that, into our energy consumption, we actually have over 140 megawatts of power infrastructure globally that HIVE owns and operates. And we consumed about 220 million kilowatt hours of energy, okay? But what is remarkable is that we only used on average 100 megawatts this quarter. And why? Because that allowed us to keep our blended cost in dollars per kilowatt hour down to 3.4 cents globally. HIVE's global electricity cost on average was 3.4 cents this quarter, which is an astounding figure, especially when there's a global energy crisis. And this is, again, what I mean about economies of efficiency. How are we tackling making sure that we're mining with the best uptime and the best profit margins? And in some case, we strategically contract the scale of our operations for profit. And so I was very proud to see that this is where we landed this quarter. Next slide. Now, bringing it a little bit more up to date, January, our production figures came out recently. We did 260 Bitcoin, which again, 110 Bitcoin per exahash. Now, during the month, we were an average of about 2.37 exahash, and we ended the month at 2.68 exahash. And this is very notable because our energy prices are starting to come down in New Brunswick, so we're able to start scaling up and plugging in more machines. Again, we scaled down a little bit in Q4 to focus on efficiency and production. Now we're starting to scale back up, ramp that production for about 2.7 exahash. Ended the month with over 2,400 Bitcoin on the balance sheet, very strong balance sheet. And we did a massive deployment of new generation ASICs, about 3,200 Buzz miners and over 3,500 S19J Pros. So these have all been fully deployed in Sweden, New Brunswick, and Lachute. So it was a banner month for HIVE, coming off of a very strong quarter. Next slide. And so where we're at today, and by today we mean mid-February, are about 2.8 exahash of operating capacity. And we have enough ASICs in our inventory that we can plug in through our infrastructure such that we could be at 3.25 exahash in March 2023. That's a 15% increase in hash rate this quarter alone. Now, we're focusing on how to best optimize it. And we will always watch Bitcoin prices. We will always watch network difficulty, and we will always focus on plugging in machines in our infrastructure in the most profitable manner possible. So while we can certainly target and realize a scale of 3.25 exahash, we will navigate in the most profitable and efficient manner through the rest of this quarter, as we always do. And by the way, this includes 160 petahash of Bitcoin mining capacity from our GPU fleet as well. Those are still firing away. Our NVIDIA fleet has been doing wonderful for us. Next slide. And of course, a big part of that scale and that growth is the HIVE Buzz Miner. We announced our commercial deployment. Again, the first public Bitcoin miner ever, and the first globally to deploy its own Bitcoin mining ASIC rig. We wanted to vertically integrate. It was a strategic collaboration with Intel. So, a lot of engineering development from our team. This was an early prototype last year. Next slide. And of course, you could see them actually deployed. Now, a lot of people ask me along the way, hey, when's it going to be deployed? How do they run? Well, they run great, and you could see them here in one of our deployments. So very proud of my team. Next slide. Now, it's not just about being, staying in one lane. We look at the market very opportunistically, right? We run a lot of analytics at Hive. I think we're known for that now. Again, most efficient miner, most profitable. And it doesn't happen by fluke, right? We do the math day in and day out. That's what our job is, right? We want to deliver value for shareholders. And so what this graph tells you the story of is that ASIC prices are at an all-time low, and your ASIC price and the dollar per terahash that you pay is your primary determinant in the return on investment when you're plotting out your actual profit from mining. So moreover than your electricity price, more than your machine efficiency, your dollar per terahash acquisition price will determine your ROI in the number of days by the biggest influence. And so that's why we were buying all the S19J Pros. It was an immense time to buy, and we bought over 3,500 in December. As we mentioned, all have been deployed, and we continue to look at opportunities to expand. It's a great time for Hive. We've got a phenomenal balance sheet, no debt. We haven't incurred any debt on our Bitcoin balance sheet. We don't finance. We don't get expensive 18% debt to buy ASICs. We buy with cash, and we buy at the right time when they're cheap. And you could see how much they've come down over the last year. People were paying over $100 a terahash a year ago, right? So again, we want to be profitable, and we want to scale with intent. Next slide, please. As we mentioned, we did an average of about 100 megawatts of operational infrastructure in Q4. Again, because we were focusing on profit, we actually scaled down a little bit. However, we have 147 megawatts built out, which we operate globally. And so we can scale right back up and turn those ASICs on opportunistically. So that's an update. Next slide. And of course, our flagship facility in New Brunswick, all 4 buildings are complete. You could see, the beautiful dual path cathedral design, and all the louvers and kind of fun engineering details. For any of the analysts who'd like to discuss that stuff, I'm always available. Next slide. Now, this is a really cool pilot project that we've launched, and we updated the photos of this. So people thought we were just piping, cold, warm air from the Bitcoin miners. No, we actually have a glycol heat exchanger. It's a very advanced system. And so what we're doing is we're heating our industrial neighbor that's a 200,000 square foot swimming pool manufacturer. And you could see on the right here, that's actually the heat exchanger. And so what it's doing is that's getting the warm air for the Bitcoin miners. That's then heat warming the heat exchange fluid, and that fluid gets pumped into our neighbor's building. And you could see the entire very sophisticated heat exchange hardware here. That's how we actually heat. So very methodical. So we're already doing heat recapture. We see a lot of people telling our story, but Hive is doing this sort of stuff, right? Whether it's demand response, heat recapture, this is stuff that Hive is actually doing. Next slide, please. And that's in Lachute, of course. Another cool thing that we're doing is we're grid balancing. We were the first to do it. We started grid balancing in Sweden over 2 years ago. And then moreover, we started hedging our electrical contracts in certain jurisdictions, buying fixed price energy contracts. And then we decide opportunistically, what is the best use of our energy resource? Do we mine Bitcoin with it, Or do we sell it back to the grid? Well, in December, we sold it back to the grid and we made $3.1 million profit. That's profit, not revenue. And so that contributes to when we say, well, we reduced our operating capacity to 100 megawatts. It's because we were busy making money selling the power back to the grid. And in January, we still made 180,000 selling back to the grid. We increased our production. So it's always about optimizing. The key word is optimizing here. That's why we focus at HIVE with an agility mindset, day in, day out, week by week, month by month. What is the best way to run the business, managing our technology, our capital, and our energy? The next slide. And Mr. Adam Sharp is going to take you through a little industry analysis. Thank you.
All right, those of you who have been around a while know that HIVE went through the bear market of 2018 as a public company, and that experience really instilled a sense of discipline and restraint in the company, which remains strong today. Let's look at some charts that demonstrate this. This first chart shows administrative costs as a percentage of revenue since 2021. Administrative costs include things like executive compensation, legal and consulting fees, insurance, etc. As you can see, HIVE has the lowest admin cost as a percentage of revenue at 9%. And this bar chart really tells the story here. HIVE is a pretty lean company. This is research from hashrateindex.com. They put out some great stuff, so check them out. Next slide, please. All right, now let's look at stock compensation as a percentage of revenue. So this is a key metric for really determining return on invested capital, right? Once again, HIVE is looking good here with just 4% of revenue as stock comp for 2021 and 2022. You can see where we compare to our peers here, and HIVE once again stands out for being lean and mean. This research was put together by Anthony Power over at Compass Mining. Check his stuff out. It's excellent. Next slide, please. All right, finally, let's look at shareholder dilution in 2022. So HIVE really stands out here once again with just 5% share dilution in 22, which was a trying year for miners with difficulty rising and the price declining. This chart is also from Anthony Power at Compass Mining. All right, now next slide, please. Let's pull it all together in a nice Venn diagram. HIVE has the lowest administrative costs, the lowest stock comp as a percentage of revenue, and among the lowest shareholder dilution during the periods covered by these charts. Thank you all for tuning in today. As a reminder, you can find us on social media as shown below, or email us at info@hiveblockchain.com.